Alright, what's up everyone? In today's video, we're going to be talking about a strategy that might be useful to trade the market that we find ourselves in today. So up on the screen, I have a chart of the ARK Innovation ETF. And if we want to just take a quick look at the chart, so you can see that ever since we had our nice sell-off, we've been in consolidation. There's a couple different ways you can look at this short-term bottoming range, but for the time being it looks like we're starting to form into a rising wedge pattern. So with all the economic data coming out, that really trumps the technicals on this chart, because supply and demand in the real economy is more important than supply and demand in the markets. So all this economic data that's coming out is really going to be the trump card going forward. So just looking at this chart, you can see that we did have a pullback, and then we came back up, had a nice bounce, and then came back down, retested. We did put in a higher low down here, which is bullish, and since then we came back up and came back down, put in another higher low, and then once again came back up, came back down, another higher low. So the thing is we are also putting in higher highs now too, so that's why we're getting this rising wedge formation starting to form. So you can see, just minus the rising wedge, we also have a nice resistance going on right here. So looks like we're trying to bottom right now, and we're just hanging out, trying to break out above this point right here. So I think that there's a couple different ways you can look at this. One is a little bit more bullish, as we're trying to form a bottoming pattern before we break out. But we also have this rising wedge forming, which is a little bit more bearish. And all the economic data is kind of the wild card, so the Joker. And the Joker and the Trump all in one. So it's going to be real interesting to see how the next month plays out. It's pretty hard to make a confident call in which direction the market's going to go in the short term. I'm pretty confident that the bear market's not quite over yet. There's nothing that's really fundamentally changed at this point. We might get a small bear market rally, but I think that even that might have already played out for the majority of the move. So not super confident, as I mentioned, but I guess we will have to wait and see how this plays out to find out. So with all that being said, the one thing that I am very confident about is we're not going to be holding such a tight range as we have over the last few months. I mean, really the majority of the time spent on this ARK chart has been between about $41 and $46, so it's been a pretty tight trading range considering how volatile this chart has been over the last year or so, and this consolidation's been all the way really back since like mid-May. So over the next month we got earnings, Q2 earnings, we got FOMC meeting, we got GDP, we got employment data, we got manufacturing data. We got all kinds of data coming out that is, individually, they're all something that could move the market. But when you pack all of that within a couple weeks, you can be pretty confident that there's going to be some kind of move setting up here in the very near future. So that's what I want to be talking about today, is when you're not as confident about what direction the market's going to move. Maybe you have a bias, but you're not super confident about going all in on a certain direction, and you think that there will be a big move. There's a strategy that you can use to play this, and that's what we're going to be talking about. So the strategy we're going to be talking about today is going to be the put ratio backspread, and this is a option strategy. So if you don't know what options are, maybe go learn about that first. They're just derivatives contracts on underlying stocks. So that's a quick overview, but definitely a lot more complicated. So definitely would be a prequel to this strategy to go learn about options if you don't know about those already. So if we look at this chart, you can see that we do have some nice resistance right up here. It's around $51, $52. We had this support over here. It was used as support, broke through it, came back down, used as resistance. So it's a pretty nice line to be targeting. The other interesting thing is this line is right up here around the tip of our rising wedge pattern that we're forming right now. So I think this is a pretty good resistance line to be targeting to the upside if we do get some bullish moves over the next week or two. And then the other line down here is a nice support line. This is where we came back down, we bottomed, and then came back down, retested it as support before we resumed upward again. So I would believe this is a nice support to be targeting for a downside move. So this support down here is between like $35 and $36. So how can we profit on this stock if it goes up or if it goes down? So let's come over here and look at these screenshots I took. So with a put ratio backspread, it's basically you're going to sell one put in the money or around the money, and basically in the money. So the price right here is $45.51. So a put that would be in the money would be anything above it. So out of the money would be below it. If you're talking about a call, in the money would be below it and out of the money would be above it. But today we're talking about puts. So in the money is above the strike price, which is the price that the underlying stock is trading at currently. So for this strategy, you're going to want to sell one put in the money. And you can always scale this up. So if you do, let's say you sell 5 of these, you'll probably buy back 10 of the ones that are out of the money. But just for sake of this example, we're going to sell one put in the money. And we're going to use a strike price of 50. And we're going to go and buy back 2 puts. So these are going to be out of the money. So the stock right now is trading at $45.52. So our strike price up here that we're going to be selling our put at is going to be 50. So up here. And then the strike price that we're going to be buying our puts at is $44.50, which is going to be actually right around where we're at right now, right in there. So with this strategy, you can see that your risk to reward profile is going to look like this. So the ARK ETF right now is trading right here. You can see the price is a little bit different as this is a screenshot, and that's why I took a screenshot, is so that we can get through this video with consistent data all the way through. So we're going to say the ARK is trading at 45.04 right now. So basically you lose money if the stock doesn't move, but if it goes up, you make money. If it goes down, you make money. So basically what you're betting on right here is that you're going to get a move. So you lose money if you don't get a move, and you make money if you do get a move. So it doesn't matter what side. In this circumstance, I'm more biased to the downside. So I personally believe within the next month, the majority of stocks are going to be trading lower than what they are trading today. So I have a bearish bias. So you can see the profit is capped right here. So once you get to this point, that's your maximum profit for the upside. So once you get there, there's no more money to be made to the upside. It just levels out. But to the downside, your profit potential is unlimited theoretically. Obviously, once you get to 0, the stocks don't go negative. So, you know, it's capped at 0. So if ARK goes to 0, you're done. No more profit to be made. But theoretically, until then, your profit to the downside is unlimited. And that's represented right here as your max profit. So your max loss is going to be this point right here. So your maximum pain point is right about where the stock's trading at right now. So basically, if you don't get a move, you're at your maximum pain point. So if you even get a little bit of a move to the upside, you're going to be recouping some of your losses along the way. Get a little bit of a move to the downside, you're going to be recouping some of your losses also. So basically, you just want to see the stock move from where it's at right now. So with the strike prices that we chose, I guess I should mention that the expiration date for these contracts are July 29th. So the thing about this strategy is your theta decay really can become a problem if you don't get a move pretty quickly after you enter your position. So it can start, the longer you hold the position without a move, it eats away at your capital that is already invested. So it's called theta decay. And theta decay really starts to pick up about 30 days out. So the whole market right now has a very high implied volatility relative to history and just as an aggregate for the whole market. So I'm trying to avoid the high implied volatility by picking an expiration date that's only a couple weeks out, just for sake of explaining how to use the strategy better. Because if you're picking one that's, say, a month out, you know, you're going to see a lot more implied volatility priced into the options contracts. So that's something to be paying attention to also. A couple weeks out, I don't really typically try to play short-term options like that, because it's pretty risky. It's kind of like a scratch ticket at that point, you know. So at least if you're trading them for a debit rather than a credit. So that's just something I personally, one of my rules. So with all that being said, the 29th, we get the majority of Q2 earnings, the big companies, announced before the 29th. You have the Fed meeting on the 27th. You have GDP coming out on the 28th. So you're going to get a lot of this data within this time frame. So you should see a move within this time frame. So with that being said, you can see with our strike prices that we chose up here, our break-evens are going to be $40.85 to the downside and $48.15 to the upside. So those are the prices where we're not losing money and we're not gaining money. So this would be $48.15, this would be $40.85. So if we get a move below $40.85, we're making money. If we get a move above $48.15, we're making money. If you do expire down here, you know, that's a maximum loss. So if the contracts expire exactly at this tip, you're losing everything. So this is definitely a strategy for more experienced traders, not something you want to do your first trade in the markets. So just wanted to point that out really quick. But if we take this information and we bring it back over to the chart, you can see that I tried getting as close to our break-evens as possible. It wouldn't let me do the exact price, so I tried getting as close as humanly possible. I guess now it is. You can do 48.15, which is basically this blue line. So just keep in mind, it's not these exact prices. These are the correct ones. I was just trying to get as close as possible. So you can see this up here, our break-even, is actually the tip, or where we got the top up here. And it's also pretty close to a nice resistance point over here too. And the one to the downside is also a pretty nice support line. You have some action over here, more action, some more action here. You have some interaction over in here, a little bit right in here. So these are some pretty good levels to be targeting also for break-evens. You know, if we do get a move up, chances are you're going to at least come up here to your 48.30 or 48.15 to be exact. So chances are you're going to break even if we get a move to the upside. if we come to the downside, you know, we're going to try to come down and test some support. I mean, you got your support up here also, so, you know, maybe you got hung up on this support before you actually make it down here. But I think if we do get some pretty bearish reports over the next couple weeks with earnings, I would not expect this line to hold up very well, especially being a rising wedge, as this pattern suggests. We're going to be breaking it at some point, and it usually happens about 75% of the way through the pattern, and sure enough, we're about 66% of the way through the pattern, like 2/3, so I think we're close enough to where this would make a pretty logical time to break down through this and come back down and find some new support down here. So I think this is a pretty safe target to the downside also. So I think with all the news coming out, you know, getting to your break-even points or pretty close is something that's definitely, maybe not, I never like saying probabilities, so a high possibility. So with that in mind, I think this is a pretty safe trade, you know, not financial advice, obviously. This is all for entertainment and chance to learn about some new stuff, maybe, hopefully. Hopefully you guys find value from this. I think it's a good time to be looking at strategies like this myself, so I find this information valuable, so thought I would just pass it on. Hopefully you guys do too. So if we come up, you know, you have your break even here. This is also around the same point you hit your maximum profit. So, you know, we have our maximum profit up here around a very nice resistance point, a little bit more long-term than something like this. So I really like that. And then down here, if we do get some pretty bad news coming out, I think we're going to be testing lows going into like GDP and the Fed report in a couple weeks. So I think you definitely have a nice profit range down in here. And even after that, if things do get worse than expected, you have a bearish bias with this strategy that we're using here. So even if it goes lower, you have unlimited potential. So just as low as it wants to go, you're making money all the way to zero. So the one way to really get screwed in this trade is to hang around where the price is right now. So if the price just hangs at this level for the next couple weeks until July 29th, you're going to end up losing quite a bit of the capital that you put in. So definitely keep that in mind. So just wanted to really communicate a strategy that I'm looking at playing in the market at the moment. Thought everyone else might find it useful to know about also, so thought I'd just do a quick video, but that about wraps it up. So I think we'll stop the video here. Hope everyone has a wonderful rest of the week. Alright everyone, thanks for watching. We hope you all found this content valuable. If you did, like this video to let us know so we can continue to put out similar content. If you have any questions or comments, or if you have any suggestions regarding other topics you're focused on and would like to see us cover, just let us know in the comments below. And subscribe to our channel to become a part of the most comprehensive upcoming communities on all of YouTube. This economic environment only comes around once in a lifetime, and we're here to act like it. We're not here to talk you up. We're going to leave our emotions at the door and navigate these markets through the good and the bad. Keep in mind that this is not financial advice. This is more of a mastermind that we can all come together as a community and use each other's unique perspectives to better achieve logical conclusions. We really appreciate all of our team out there watching, and we look forward to continuing conquering these markets with y'all going forward. Until next time, stay one move ahead. Have a great day, everyone.